Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 761A, and today's date is September 8th, 2015, and the title of this episode is China Now Dumping Dollar from Oil Trade for Yuan. Now, before I get started, I just want to make an announcement. Tomorrow, Wednesday, I'll be uploading an interview with James Wesley Rawls. We talk about what has been happening out in the Middle East, in Ukraine, the Pacific. We talk about the coming collapse and how you can prepare. If you're on the X22Report.com email alert system, you will get an email. If you signed up to the X22 Report Spotlight YouTube channel, YouTube should send you an email letting you know the video is there. If not, you can go right to YouTube, type in X22 Report Spotlight. It should bring you right to the video, or you can come over to the X22Report.com site. You will see the video on the right-hand side. Let's get right into the economic collapse financial news. Now, we understand out in Greece, the people there basically are suffering. I mean, the government, their government that they elected, did not listen to them. They voted to say, you know something, we're not going to go along with the central bank's agreement. We don't want this. But the government went ahead and did it anyhow. So right now, 5 years after all of this austerity, higher taxes, deep cuts in public spending, record suicide rates, homelessness beyond anyone's worst forecasts, it isn't any surprise that Gallup is now reporting that a majority of adults in Greece right now, 55% of them, are saying that they think converting from the Greek drachma to the euro in 2001 was a complete mistake. They're saying it hurt Greece and did not help it whatsoever. Yeah, because what happened was they joined up to a central bank system. And a central bank system, like the Fed, they have a product. It's called debt. Their product is debt, and they put each and every one of these countries into debt. They don't care about the people. They don't care about the government. All they care about is placing that country into so much debt that they are helpless to do anything else. Then they swoop in, they privatize everything, and they sell off bits and pieces of the country. This is how the central bankers make their fortunes. They steal the natural resources of the country. They give them this ridiculous paper and ink. They call it money. The governments believe them. They put them into debt. And they swoop in and take the real assets of the country. Remember, central banks have no allegiance to a country or a people. Their allegiance is to themselves. It's to profit. It's to their product, which is called debt. This is why they keep saying we need more of this. We don't have enough of it. I mean, does it make any sense? Think about your own household right now. Bringing on more debt, does that help you? Or does it make the situation worse? I know it does in my house. When there's too much debt, it's awful. When there's a little bit of debt, it's much better. When there's no debt, it's fantastic. We see out in the Eurozone, the 19-nation Eurozone, their GDP was revised. And they're letting everyone know that everything is okay. There is nothing to worry about because we just revised the numbers and we're telling you that we're doing a lot better. We're heading towards this recovery. Really? Well, when you really look at it, is it that much better? No. They upped it by like a 0.1% point. And they're trying to convince everyone that everything is fine. But coming from Fitch, what do we hear? Eurozone countries may not see their credit ratings return to levels seen before the crisis of 2008-2009. It's not going to happen. They're telling us we're in a recovery, but unemployment ranges from 15% all the way up to 50%. Youth unemployment ranges in these countries from 35% all the way up to 55%. Where is the recovery? And then pile on the debt on top of that. So we can see right now, this is not a recovery. They pulled this in the summer of 2013, where the Eurozone came out and said, we're in a full recovery. Unemployment's going to drop. Jobs are going to be created. GDP is going to go way up. We're projecting, at least 4 or 5% GDP numbers. Guess what? It doesn't happen. The only way it happens is when they manipulate the numbers. We see the Chinese stock trading volume collapse to 3-year lows. It looks like they have taken over their markets. The sellers are out, and the volume has completely dropped. Actually, we see this in the United States. We see there is very little bit of volume because what we're seeing right now is high-frequency trading. We're seeing the plunge protection team come in. So the volume is very low, but the stock market is continually pushed up. And we're going to see a lot of this. We're going to see the market fluctuate down, fluctuate back up. We saw this back in 2008, 2001, 1929, right before the collapse. And this time, it's going to be much, much worse. And from all the government numbers and their statistical manipulated, illusionary numbers that they keep throwing at us, that unemployment is 5.1%, GDP is fantastic, all the way up to 3-something%. What are we seeing here? Well, if unemployment is continually dropping, that means more people have work. That means people are making money. That means people are going to start spending their money. I mean, the gasoline prices are dropping like crazy. People have extra money, right? You would expect they would take all of this money and spend it in retail and go out and start purchasing things. But why isn't this happening? Well, when we look closely at this, we see that spending is actually falling. Now, we have to remember, we have the Gallup poll, and then we have the Conference Board. The Conference Board is sponsored by the government. The Conference Board is telling us that everything is absolutely fine. The economic outlook looks fantastic. The Gallup poll, which is a people poll, is showing that the economic outlook is worsening. Now, according to the latest Gallup report on U.S. consumer spending, they took a random sample of about 15,000 adults. They were interviewed by phone. An American self-reported daily spending average about $89 in August. Down not only from August of 2014 and 2013, but the fourth month in a row of a year-over-year spending declines, as well as the lowest monthly spending since March of 2015. As Gallup reminds us, spending peaked at $114 in May of 2008, before completely plunging amid the global economic crisis. From 2009 to 2012, spending stagnated from $58 to $83. And August right now is weak, and it's falling. Now, you would expect this to be much, much higher with everyone employed, because we're almost at the point of full recovery. But we are not seeing this whatsoever. What we have right now are people working in part-time jobs. We have to remember how this is all figured out. When someone loses their full-time job and they get a part-time job or 2 part-time jobs, that's counted as a full-time job. If they have 2 of them, that's 2 full-time jobs, even though they're part-time. This is why we don't see spending increasing. This is why we see it falling, because it's getting worse and worse as time goes on. Now, during the crisis of 2008, everyone decided, okay, I'm going to save my money because I don't know what's going to happen. That's why we saw those figures so low. As time went on, going to 2012, we never reached the same amount before. It leveled off, and now it's falling again. And from the start of this year, we have seen massive layoffs. We're on track for 600,000 layoffs this year. In the Great Recession, when the market completely came down, 1.2 million layoffs were in that year. So if this is a recovery, we're in for a really big problem here. Now, the corporate media, the U.S. government, is trying to convince us that, oh, this little dip in the stock market, this was a correction, this was deleveraging. U.S. household underwent was a debt reduction, and now they're ready to take on more debt. Well, no, this right now is not a debt reduction. People are not ready to take on more debt. What we're seeing right now is this whole entire system start to fall apart. I mean, think about this. We have student loans at $1.1 trillion right now. And the labor participation rate is at 38-year lows. Millennials are unable to enter the labor force, opting to roll over student loans instead. While aged workers, those 55 and older, thanks to ZERP, are crushing their income-creating capacity of their savings. And they don't have the resources to exit the labor force. They have to continue working. And we're seeing more and more layoffs from the big companies. So are we deleveraging? Are people ready to take on this new debt? No, they're not. What this shows me is that all these bubbles are getting ready to pop. Because what we're seeing is the economy is contracting. I mean, look at the Baltic Dry Index. It has fallen now to 873. It was at 1,000 plus points. I think 1,100 at the top. And then all of a sudden, it started dropping like crazy. At this point, last year, the year before that, this number was at 1,200, 1,800, 1,700. Because factories were getting ready to produce for the holiday season. They were ordering the raw materials. But we're not seeing that whatsoever. We see in Chicago, they need $500 million to avoid mass layoffs and partial shutdowns of the school system. Actually, lottery winners in Chicago, they're getting IOUs because the state doesn't have the funds to pay these people. Chicago Public Schools, with 394,000 students and nearly 21,000 teachers, has closed more than half of the projected $1.1 billion shortfall through cuts, borrowing, and other means, but is looking to the state to come up with the rest. The school board warns of deep cuts later this year if Illinois, which faces its own fiscal crisis, doesn't deliver another $480 million in the coming months. I mean, Chicago is in big trouble. Detroit is in big trouble. Puerto Rico is defaulting. So what are we seeing here? We see a complete collapse of the system. And all the central bank U.S. government can do is manipulate numbers to convince you otherwise. That is what we're seeing. We see Germany's Wolfgang Schäuble. He delivered a sharp critique of the world's addiction to debt and central bank printing money. He says an excessive reliance on debt and central bank stimulus is no way to manage an economy. Fewer debts, fewer crises, more sustainable growth. That is the best policy we can produce. I agree with him. I don't agree with him on a lot of things, but I do agree with him on this. We see IMF Christine Lagarde in her speech in the G20 meetings in Ankara. She's telling us that in capitalism, bubbles will eventually burst. The only problem is we don't have capitalism. We have fascism. We have a controlled economy. which is being artificially blown up to burst. So what she's saying is absolutely false. We have figured out who the mystery buyer of all these U.S. treasuries are. You know, the treasuries that China is dumping through Belgium. All of a sudden now, from the Wall Street Journal, it is a hedge fund run by former Yale University Jeffrey Talpins of Element Capital Management. He worked for Goldman Sachs. The largest purchaser in dozens of government bond auctions over the past 10 months. This is who is buying up the bonds. So we can see at this point, and we do notice that most of these people work for Goldman, all part of the central bank system, all there to keep the system alive, to make sure that there is a buyer for the treasury bonds, because if there is a seller, there must be a buyer, and the Fed doesn't want to take on more of this to add to their portfolio. So we see it right now. The Fed is having Japan, hedge funds, banks all purchase the treasury bonds to take up the slack. Now we know China, they are purchasing a lot of gold. They're selling their treasuries, and they're continually selling their treasuries. And the month of August, China added 15.98 tons of gold to their gold holdings. And like I said, the country that holds the gold is going to come out as the winner. Those people who have gold or silver, they're going to come out okay through the crisis, if we're just looking at it economically. China right now is planning to launch its own oil benchmark in October, similar to Brent and WTI, striving for a more important role in establishing crude prices. Unlike the Western benchmarks, the Chinese contracts will be nominated in the yuan, not the US dollar. Oil futures will be the first Chinese contract to permit direct participation of foreign investors. However, this is not the first step for greater oil market openness in China. In July, Beijing allowed private companies to import crude. Previously, importing was only done by state-run majors such as Sinopec. So what do we see here? We see China now is making an additional move. They're purchasing gold. They are selling their treasuries, and now they're creating the petro-yuan. They're not going to be using the dollar. They've been making bilateral trades all across the world, trading in yuan, setting up clearinghouses, which bypasses the dollar. They are delinking from the Western world at this point. And this is why we see a ramp up with the corporate media, with the U.S. government, the central bankers, in blaming China for everything that is happening. I guess in a roundabout way, they are to blame because they're completely delinking from the system. And this is causing havoc on the system. So if you want to look at it that way, yes, they are the cause. But the real cause, when we go to the meat and potatoes of all this, is the central bank system. Remember, all these countries have a huge amount of debt, unemployment, GDP's down the toilet. There's no more manufacturing. It's falling apart. And all they're doing is creating money. And we know eventually this whole thing will fall apart. This is why everyone needs to be prepared and ready. Because we know eventually what's going to happen. Just like in 2008, all of a sudden you're going to wake up one day and this whole system is coming to a screeching halt. This is why you need food. This is why you need water. This is why you need medical supplies, a weapon to protect your family, cash, gold, silver. You need to do this. I would suggest everyone listen to the interview with James Wesley Rawls tomorrow on the X22 Report Spotlight, which we go over all of this and what we can expect to happen during the collapse and how to be prepared for it. If you're just starting now and you want to ramp up your supplies, you can go to lifereliance.com. They have bug out bags. They have food, water filtration systems, seed, first aid kits. You can put everything together the way you want it or buy their package deals. It doesn't matter. You can get what you need there. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.